G'day folks, today we're going to talk about mistake number 9, and that's thinking that when you buy a property, particularly you're an investment property or your own home, that you need a 20% deposit. Now, so many people obviously try and avoid paying the charge the bank puts on you if you go to buy a property, which is called mortgage insurance, because normally that if your loan is 90%, you're putting a 10% deposit, that's going to be about 2% of the value of your loan. That's going to be 10 to 15 grand or 20 if it's a higher priced property. Now, if you want to borrow at 95%, of course, then your LMI is going to be about 3%. So it's even higher again, that could be $20,000 or $30,000. So that's a fee the bank gets you to pay them on their behalf to protect their risk if you default on the loan, which seems a bit crazy, but it's all about their profit and their risk, not about yours, but we need to be looking after ourselves first. So most people sit down and go, I don't want to pay that fee, so I'm going to save a 20% deposit. Now the reality is most people in today's world are spending more money than they make, so they're not even saving any of this. So how do you expect to save 20% if you're already not saving anything? So the key is understanding how to leverage that money and be able to do that. Now, if you can basically put a 10% deposit in, there are ways and banks that will let you add the mortgage insurance onto the loan. So let's say it was a $400,000 loan, the mortgage insurance was $10,000, you can add that $10,000 onto your loan and then only pay the interest on that, which might only cost you $500 for the year, but you've been able to get your property straight away. So guys, look at other options other than just doing 20%, because the key is to get into the market and get that first property and start your equity growing, start building your assets, start maximizing your tax deductions, start working on debt reduction as well on your home, and then you'll be in a position to leapfrog to the next property. Too many people who waited to have a 20% deposit never got into the market and have stayed renting all their lives because they don't understand leverage and they don't understand the compounding effect of paying down bad debt. So bottom line is, yes, take control of your money and make sure you've got a good savings buffer in place, build it as fast as you can, but you don't have to wait for 20%, even as little as 5% you can get in if you're buying your own home. And with the home guarantee at the moment, you can even get out of mortgage insurance and get into the market. And remember, you could start with your own home, move in there, and then 6 to 12 months later, depending on your circumstances, you might be able to move out and convert that to an investment property and start getting tax deductions and start rolling your portfolio. Something to think about. Finance is the key. You need to understand it.